Welcome to the Imperium Forex daily video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, it would seem that the price action for silver is showing some hesitancy towards this level of $16.55. Currently trading around $44.49. The market may on the day show a slight turn of weakness as the indicators are slightly shaping up to a potential pullback. Although the support does come in minor at $16.30, we should see short round of demand in front of this level $16.1520. The view overall should see a rebound from this level and look towards 55 or as a stretch to $16.90. But some caution should be heeded here, purely for the fact is that for those that are long, they should lift their stop losses accordingly if they've been long through this recent uptrend. So do be aware that we could get a pullback today. Overnight, the gold outlook remains relatively bullish as it touched a highest level since late June of 1,258. Or just in front of that resistance of 1,259. With a doji in place, I do expect to see a potential pullback towards 49, or with the base now holding at 1,244. However, in this uptrend, the market's always been a buy on dips, and I expect to see this pattern continue. So in the next 24 hours, as I mentioned, we could see this pullback. As long as we maintain above 44, then I expect to see a recovery and take out 59. And look up towards a target of 64 to 70 as a stretch. It is always viewed at the moment that with political uncertainty in the US is that the bullish stance will hold while the economic and political uncertainty remains to underpin a safe haven demand for the gold. So I still expect to see this pattern continue to eventually reach its target. The outlook for Aussie has it's a little bit mixed now after last week. The RBA jumped in and played down its hawkish meeting minutes from Tuesday, and the RBA got comments on Friday from the Deputy Governor Guy DeBell, who briefly weakened the Aussie to 78.75 before the market rebounded. This week, the central bank will be monitoring the CPI that is out this Wednesday. Forecast is at 0.4%. The previous was 0.5. Sorry. So looking ahead, I do expect to see some weakness returning, with the support still seeing minor 85, and I'm probably now likely to see bids starting to build up in front of that level of 78.50. Looking at the top side, resistance likely to cap on an intraday basis at 79.60. Well, overnight, the euro failed to make any significant moves, although it did print its fresh high of 116.84, last witnessed in August 2015. Last week, the EBC kept its monetary policies unchanged after an unanimous vote to keep interest rates at 0.0%, with no comments made from the rate statement. However, the remarks from ECB President Mario Draghi did trigger the euro above the 116 handle and has been maintained there. With the dollar index also recovering from a 13-month low overnight of 93.65 on the index, the market is now looking for a potential pullback to 116.15. Now, if we get a break beneath there today, should give further view towards 115.30, with a base now seen at 114.70, where this uptrend comes in. The dollar yen price action overnight ended in the New York session by posting a classic long-legged doji, as you can see here. Now, long-legged doji is when the market is indecisive, and if it was challenging the downside level and the bears are a little bit cautious to this move, then we might see 110.50 as a short-term base and now look for a further test to the upside. Resistance now comes in, as you can see, at 111.65. A break above there would give further scope to the upside and bring in a target of 112.40, 45 and reassess from there. And moving on to the pound, you can see that the market did attempt to restore its bullish sentiment after some modest gains to print a high of 130.57 before easing back in New York. Currently, the market still remains to the nervousness, to the jitters of the Brexit exit, as the Prime Minister Theresa May's fragile government must negotiate with the European Union, which is expected to show no interest in providing any support to Britain as the divorce proceedings continue. Policyholders at the Bank of England have been at odds over raising interest rates, with the next meeting seen on August the 4th, or Sydney time, which is on the 3rd at 9 p.m, and it's expected the policyholders to hold the benchmark rate at 0.25. This should actually keep the sentiment to a negative stance, and if we see a break beneath the 130 handle, then the market will look towards 129.65 and lower down towards 128.60-70. So that wraps up my daily video. Thank you very much for joining me, and I hope you have a wonderful day ahead.